All right. Good afternoon, everyone. Thank you for joining our webinar on setting up a Category 3 fund in Gift City. I'm Yashasvi Jain, an associate with India Juris and the moderator for today's session. On behalf of India Juris, I extend a very warm welcome to all the participants and panelists for today's session. Thank you for taking out the time and joining us today. A brief background of India Juris. We are a leading full service law firm with a strong presence in Indian as well as global markets. We have consistently been ranked number one in private equity and venture capital transactions by Venture Intelligence Report. We have offices pan India in cities like Delhi, Gurgaon, Mumbai, Bangalore, and Gift City. This webinar today is a part of an initiative taken up by India Juris. We have been dedicated to disseminating information on Gift City through monthly webinars since April 2022. For those of you who might be new to the concept of Gift City or Gujarat International Financial Tech City, it is India's first operational smart city and international financial services center. To take the webinar forward today, we have on our panel Mr. Jasmeet Singh, an alumnus of Shriram College of Commerce and a qualified CA intermediate professional. He is currently working as a grade A officer and an assistant manager in the division of investment funds at IFSCA. Welcome, Mr. Jasmeet Singh. Next on our panel, we have Mr. Mukesh Khandwala, who has an extensive experience of over 40 years in auditing and taxation. He is currently leading as a senior partner at CNK Khandwala and Associates and is also an esteemed member of CNK and Affiliates with offices pan India. Welcome, Mr. Mukesh Khandwala. On our panel, we have last but not the least, Mr. Sameer Rastogi, the managing partner of India Juris. He has been in practice for over 25 years and has a vast experience in a variety of domestic as well as global matters. Welcome, Mr. Sameer Rastogi. I would now
Thank you,
request
Shasi.
I would now request Mr. Sameer Rastogi to please welcome all our esteemed panelists and take the session forward. Over to you, sir.
Yeah. Thank you, Shasi. So, again, very warm welcome to all the participants for joining in the webinar. And we always love to disseminate as much as information about the Gift City, the what is happening in the Gift City. And today we are very much enjoyed by and Jasmeet Singh joining us. So thank you, Jasmeet, for joining us. And we hope your deliberation would be of immense interest to the participants. Nevertheless, Mr. Mukesh Khanwala, everybody knows him in Gift City. Thank you, sir, for joining today's webinar. And I think you are very well-known figure within Gift City, and everybody knows you. And I think with your experience, the people who are joined here, the participants, they would be benefited. And just for the information of our panelists, co-panelists, the audiences over here are those uh, who wish to set up funds or do any kind of activity in Gift City. There are certain funds who have joined in. There are accommodations from academics, and there are various consultants who are advising their clients on Gift City. And large number of the people who attend the webinar they are yet to decide whether I should do in India with SEBI or in Gift City, what not. So we have very interesting batch of people trying to understand various nuances about Gift City. So without losing any time, so I would invite Jasmeet Singh to please let the audience know about the regulator's view. And I think we'll have a lot of questions. We have received a lot of questions offline through our earlier webinars within this webinar, and the people keep meeting us on with related to Gift City. So let us hear you out on the Gift City about Cat3. So this particular webinar, friends, is dedicated to Cat3 funds. Nevertheless, you are open. You can ask various other questions, and we'll try to respond to those questions. So over to you, Jasmeet. Thank you.
Thank you, Mr. Sameer Rastogi. Am I audible?
Yes.
Yeah. So thank you so much for having me here. And these initiatives are always helpful in reaching out to the wider audience. So thank you, and firms like you who keep organizing these seminars and webinars. And also, I would like to extend warm greetings on the occasion of Guru Nanak Jayanti today. It's a big day for us. So Yeah, happy Guru Nanak Jayanti to all of you.
Same to you. Same to you. It's really,
Yeah.
I mean, we have also, so today I'm in Gift City and I'm meeting a lot of people here. And
Right.
so we see festivity a little bit with people celebrating this event. Thank you.
Yeah. I'm just sharing my presentation. Is it visible?
Yes, it's visible. You can put it on. Yes, it's fine.
Yeah.
Great.
Yeah, so today I'll be talking about Gift City in brief, very brief, and then the role of IFSCA in the development of Gift IFSC particularly, and then the fund management regulations, and lastly the process of setting up Cat 3 schemes in Gift IFSC. So let's begin. Um, so Gift City, as all of us now are pretty aware that it was conceptualized in 2007 by the then Chief Minister of Gujarat, Shri Narendra Modi ji. So it's the first greenfield smart city of India. It's divided into two zones. One is special economic zone, and the other is domestic tariff area. The special economic zone is the one which houses India's first international financial services center, which is what we all are concerned with here. And then it's a greenfield smart city, and it is proposed to be expanded to 3,000 acres now. Currently, it's 886 acres land parcel, and the idea or the purpose behind establishment of Gift City was to onshore the offshore business that had gone to various other jurisdictions like London, New York, Luxembourg, etc. So to onshore all those Indian businesses and also to attract other global financial services and businesses into India, this was envisaged. And again, as it's a smart city, it has state-of-the-art infrastructure such as automated waste management system and district cooling system, etc. Uh, Talking about the connectivity is also one of the major points. So it is very close to the airport, as Mr. Sameer Rastogi would vouch for it. It's very close and very convenient to travel to Gift City, either from Bombay or Delhi or Bangalore. It's very convenient, and also it has metro connectivity as well now. So, in the words of Shri Narendra Modi himself, he says that if you integrate with Gift City, you integrate with the world. So that's how we have imagined or we have envisaged Gift IFSC or Gift City as a city in India. So this is a snapshot of business activities that are currently being undertaken in GIFT IFSC particularly. So as I mentioned, GIFT City has two zones. One is domestic tariff area and one is the SEZ. So this is the IFSC zone, the SEZ zone, under which these are the various activities that are being undertaken. In banking, we have around 28 banks now. In capital markets, we have all the participants of the capital market ecosystem, such as stock exchanges, clearing corporations, broker dealers, investment bankers. Asset management, we are going to talk about in detail. We have fund managers, investment advisory, PMS, distributors, AIFs, etc. Insurance is also keeping up with the development now, and it is picking up. So we have Indian and foreign insurers, we have insurance intermediaries as well. And then this is another important area, which is niche institutions that IFSC is focusing upon now. It includes the International Bullion Exchange. It is the first bullion exchange of India, which was launched by Shri Narendra Modi ji in July of 2022. And then we have global treasury centers, we have aircraft leasing and financing and ship leasing and financing, which is also picking up pace now in GIFT IFSC. And then there are some emerging areas of focus, which IFSC is keenly focusing upon. It includes foreign universities. We have two foreign universities now, both from Australia. We have global in-house centers of the likes of Bank of America, and then we are focusing upon attracting various professional service providers and payment services. So those business activities have been enabled or facilitated by the regulatory architecture, which was brought up by the IFSCA. These are the various regulations that have come up by now. So we have banking regulations, which came in 2020 during the COVID time. And then from that, we have come a far way. We have fund management regulations. We have direct listing regulations now coming up. Then ship leasing regulations are there, and foreign university regulations are also there. So here, the role of IFSCA becomes very important because these are the regulatory frameworks that have been rolled by IFSCA. So IFSCA as an authority was established in 2020 under the International Financial Services Authority Act. So it's a unified regulator. Basically, in simple words, what SEBI, RBI, PFRDA, and IRDI do in domestic territory in India, the IFSCA is mandated to do all those duties and discharge all those functions in GIFT IFSC zone. So it has powers of all the 4 domestic regulators in this particular zone. So it is mandated for the development and regulation of financial services, financial products, and financial institutions in the GIFT IFSC zone particularly. So the vision or the goal that our chairperson also keeps mentioning in his various speeches, that we want to help India to reach to the goal of Viksit Bharat by 2047. So it requires a lot of capital, a lot of infrastructure building. So through GIFT IFSC, we envisage that we help in providing ease of doing business to various businesses and financial services, so that they get set up their shops here, and then the capital goes into India, and it helps in building India's infrastructure and other various facets of India's development. So this is the main thing, the main growth story of GIFT IFSC, as we can call it. So if you see in the last 2 to 3 years, we have seen a phenomenal growth in GIFT IFSC. You see the number of registered entities, it is close to 700 now. In terms of stock exchanges as well, we have 2 stock exchanges, and the volume on both of those stock exchanges is increasing at a rapid pace now. The monthly turnover of international stock exchange was more than $100 billion in September of 2024. Similarly, debt listing is increasing, and the derivative transactions are also increasing. The fund management side, I'll be talking in detail about the numbers of fund management, but other than that, this shows the rapid growth and development of GIFT IFSC. So these are the key entities that have already set up their shops in GIFT IFSC or present indirectly in GIFT IFSC. In terms of banking, we see many foreign banks setting up their shops in GIFT IFSC, including JP Morgan and Barclays, Deutsche Bank. In funds industry, RDI is the first sovereign wealth fund which has set up its shop here. Lightrock, Morgan Stanley, Baring Capital, etc. And then there are many service providers here. All the big 4 firms are here. And other entities such as global in-house centers of the likes of Bank of America are here. And then in the domestic territorial area, we have Google, we have Capgemini, who are providing back-end services to their headquarters. So under the mandate of IFSCA to develop the GIFT IFSC zone and bring up various regulatory frameworks, the IFSCA brought up fund management regulations in April of 2022. So it was benchmarked with global best practices and with global jurisdictions like Singapore, Dubai, Hong Kong, etc. So here, what we envisaged was that we will manage, or we will regulate the investment manager and not the fund. So one key difference here to note is that in SEBI, in the SEBI AIF regulations, the fund is regulated, while in IFSCA fund management regulations, we have now started to regulate the manager. Fund is also regulated, but in a light touch manner. The main focus is on the investment manager. So that is the key difference here. In SEBI, the fund is regulated. In IFSCA, the fund manager, the investment manager is regulated. So we call the investment manager the fund management entity, and the fund management entity can get registered into 3 categories. It can have 3 types of licenses. One is authorized fund management entity. The second one is registered non-retail, and the third one is registered retail. Once the FME gets registered, it can launch various funds. These funds can be venture capital schemes, restricted schemes, including category 1, category 2, category 3 schemes. These are similar to the AIF regime in SEBI or in domestic India. And then there are retail schemes, which are akin to the mutual fund schemes. Then under the regulations, there are other focus areas as well, such as special situation funds, exchange traded funds. We have both public and private ETFs enabled. The framework for these are enabled under the regulations. And then there is a dedicated chapter on ESG funds as well. And there is a circular also on ESG funds. And then other fund management activities are also enabled, such as PMS, investment trusts, such as REITs, in which both public and private, and then family investment funds. So all in all, under the regulations, what we have tried to do is that provide a single unified license to an investment manager or the fund management entity to carry out or undertake various fund management activities. It can be a fund, it can be a family office, it can be a REIT, InvIT, ETF, etc. So going a little bit into the detail of the licenses, the category of licenses that we have. So basically, we have arranged into a step ladder kind of a structure wherein as the entity risk increases, the compliance requirement also goes up. So the light touch regime is the authorized FME. It is appropriate for those managers who want to launch venture capital funds, early stage venture funds, SME funds, small and medium business and focused funds, angel funds, or family offices. Next comes the registered entity non-retail, under which you can launch venture capital schemes, private equity schemes, REITs, InvITs, PMS, etc. And then at the highest pedestal is the retail scheme, which is akin to the mutual fund scheme in SEBI. So it has the highest regulatory oversight because the risk is also higher. Here, retail investors can also participate. So there's one more thing that registered non-retail license can undertake all the activities of authorized FME as well. Similarly, registered retail license can undertake the activities of authorized as well as registered non-retail. So these are the numbers of the AIF or the fund or schemes in GIFT FSC as on October 31, 2024. You can see the funds industry has been one of the star businesses in GIFT FSC. The numbers speak for themselves. It has seen a phenomenal growth in the last couple of years. So we have more than 130 plus fund management entities or the investment managers managing more than 175 funds with a total commitments of more than $40 billion, out of which around $6 billion has already been raised and around $4 to $5 billion has been invested. And then there's PMS, more than 15 PMS are there for providing services to their clients. Then we have foreign presence as well, foreign funds of the likes of Morgan Stanley, InvestCorp, Investec Capital, Baring Capital, etc. are present in GIFT FSC. And then many prominent players, marquee players such as Kotak, HDFC, Bloom Ventures, IIFL, True North, A91, etc. are there in GIFT FSC. Many large PE funds, institutional funds, pension funds, endowments are also there. RDI is there as the first sovereign wealth fund of India of GIFT FSC. Then GIC, Temasek, CPBI are various investors in various funds in GIFT FSC. The entire fund ecosystem is available at GIFT FSC, including the trusteeship firms, the custodians, the fund administrators, the law firms, the auditors. So it provides a comprehensive ecosystem for the fund managers to come and set up their shop in GIFT FSC. So talking about the types of schemes that the fund management entities can launch, I'll briefly touch upon these schemes because I've been told that the next presentation would be covering these in much detail.
So Jasmeet, you can take on this. So
okay.
It's better you take on this. So I'll shorten that. No issues. You can take on this.
Okay.
Please.
Okay. Yeah. So there are three types of scheme majorly which can be launched by the FMEs. One is venture capital scheme, the other is restricted scheme, and then there is a retail scheme. So the venture capital schemes can be launched by all the three FMEs, whether it's authorized, registered non-retail or registered retail. Restricted schemes can be launched by authorized and registered both retail and non-retail. Authorized cannot launch category 2 and category 3 schemes. It can launch category 1 scheme. And then retail category can launch all the types of schemes because it's the highest license that one can get. So who can invest? Investors, there's a investment limit. For example, the venture capital schemes have investors which are more than $250,000. Only those investors can invest. And then for restricted schemes, it is $150,000. And in retail schemes, there is bifurcation into open-ended and closed-ended, and according to which the limits are decided. Launch of the scheme, this is very important. So for venture capital schemes and restricted schemes, both of these schemes are under green channel. So by green channel, what I mean is that the scheme can be open for subscription immediately upon filing with the authority. So you can open it for subscription. So that is what green channel means. So venture capital schemes as well as restricted schemes are under green channel, while retail schemes, which are akin to mutual fund schemes, since it has a higher regulatory oversight, it is not under green channel. Then number of investors less than 50 for venture capital schemes, less than 1,000 for restricted schemes, and at least 20 should be there in case of retail schemes. Types of scheme, venture capital schemes can only be closed-ended, while restricted and retail schemes can be both closed-ended and open-ended. So legal structure, if we talk about the legal structure of the schemes, can be in the form of company, LLP, or trust. Then there is maximum single investor holding, which is not there in the venture capital schemes. It is there 50% in the restricted schemes, and for the retail schemes, it is there. Minimum scheme size is same for all the schemes, which is 5 billion USD. Leverage is another important point. So basically, leverage is not allowed for retail schemes. It is only allowed for temporary liquidity requirement. While in case of venture capital schemes and restricted schemes, leverage is permissible, subject to disclosure in the PPM. So it's a disclosure-based regime wherein maximum leverage which a fund intends to take can be disclosed in the PPM. So there's no maximum limit, but the disclosure needs to be there in the fund document. And then there are certain investment diversification norms which are specifically there for retail schemes. Sorry, I'm not able to. Just a moment. I'm sorry, but I don't know why I'm not able to move ahead in the presentation. Uh, yeah.
Acha,
Yeah,
okay,
yeah.
yes.
Yeah. So yeah, I was talking about the schemes. I'm really sorry for the interruption. So yeah, investment diversification norms are there for retail schemes. And then there are some other aspects under the regulations. The PMS has been enabled under the single license, single unified license, and family offices have been enabled. Then there's a fund lab, which is an innovative initiative under which the new fund managers who want to try their new strategies in a controlled manner can try their strategies under this initiative. Then SPV framework has been enabled for enabling co-investments and leverage through the fund. Then ESG, as I mentioned, there's a dedicated chapter as well as a circle on ESG schemes. Then ETFs and stressed assets are other focus areas of the regulations. Coming to the topic of the day, category 3 schemes. So category 3 schemes, first of all, I would like to clarify here that category 3 schemes and retail schemes are two different things. So retail schemes are type of mutual fund schemes, while category 3 schemes are AIFs only, alternate investment funds only, and it is similar to Cat 3 in SEBI. So these are schemes which undertake diverse or complex trading strategies, and it can be listed derivatives or unlisted derivatives. Mostly, it's listed only, and also for longevity finance, these kind of schemes can be launched. At IFSCA, we have seen that falling strategies have been registered with us. Hedge funds are there, long only strategies are there, long short funds are there, quantitative strategies are there. So out of the 175 plus funds that we have, more than 100 funds are category 3 schemes registered with IFSCA. And prominent players who are undertaking Cat 3 strategies from IFSCA include Trupicon, Equitas, Alpha Alternatives, HDFC, Aditya Birla, Morgan Stanley, etc. So why gift IFSC for Cat 3 funds? I think this can be better answered by the industry itself. It will depend upon their strategy and what they intend to do. But I can tell you what key benefits IFSC, gift IFSC provides for the funds in general and Cat 3 in particular. So there's green channel enabled for restricted schemes, including Cat 3 schemes. Then there's a disclosure based regime for leverage. There's no upper limit on leverage, but you have to disclose whatever leverage you intend to take in the fund document. And then there is conducive taxation regime for investors, since the category 3 schemes or funds are taxed at the fund level. So it provides tax certainty to the investors. I think the taxation thing would be taken up by in the subsequent presentations also in detail, is what I've been told.
Yeah.
So,
Yes.
Yeah. And then there is single registration, as I mentioned, under the regulations. And again, a unified and a strong regulator who is very proactive and very receptive to the industry feedback. We keep on organizing Chintan Shivers and industry meetings and webinars, also participating in the webinars to get the industry feedback and then inculcate changes that we see are feasible and are important for the growth of the GIFT IFSC as well as the businesses in GIFT IFSC. Then no PAN for foreign investors is required. And again, the obvious advantage is that you are near to the place of investment, which is India, and there's ease of operations, as well as there's a huge opportunity to become part of India's growth story. Yeah. So this is a typical fund structure that we have seen in GIFT IFSC. This is more of an inbound structure, wherein in the central triangle, you see the GIFT fund being established, which is being managed by the FME. it is getting money from the foreign investors, person resident outside India or NRIs, and it is investing into India, into listed securities or unlisted securities or other permissible securities under the regulations. So this is a typical structure that we've seen in GIFT IFSC. So coming to the process of setting up of Cat3 fund in GIFT IFSC, so it's a simple basic process. It's a two-step process. First, you have to register the fund management entity with us. In registration of fund management entity, you'll have to first identify the office space within the GIFT IFSC zone. You have to register with the registrar of companies, and then you can file your application through the SWITS portal. So SWITS is another new initiative that IFSC has taken for ease of doing business in GIFT IFSC. It stands for Single Window IT System Portal. So it's a single window destination wherein you can file your application and you can get SEZ approval as well. You can get various NOCs from various sectoral regulators, for example, SEBI, RBI. You can get your GST also by applying at the same portal. So it's a single window destination for getting various approvals. So it has been enabled for the fund management entities, but not for the funds as yet. So for the funds, it will come under the second phase, which is 2-3 months from now. So once you set up your FME, once you get the certificate of registration, you can file for the fund for its registration, which is again under the green channel. So for that, there are various steps such as trust deed and then again application to IFSCA, and then you can launch your fund operations since it's under the green channel, especially the restricted schemes. So this is the basic process by which you can launch your fund and get your operations underway in GIFT IFSC. So yeah, that's pretty much it. I would like to end here, and I think I tried to be very brief and concise in my presentation, and I'll be happy to take your questions now, if anybody has any questions. Yeah, thank you.
So, thank you, Jasmeet. It was really, you have covered very well, and some points are knowledge to me also. So, thank you for giving an overview on GIFT and on setting up Cat3 fund. And I think we will be taking questions after the tech sessions, 20-30
So
minutes from now.
I hope
And
I did
in
not
the
exceed the
meantime,
time.
yeah. So in the meantime, the participants who have any questions, they may put in the chat box. So we'll take those questions after we have done the presentation. So Jasmeet, you may please unshare your documents so that we can take up other one.
Sure.
Yeah.
Sure. Yeah.
So before I call Mukesh ji for the presentation of tax, friends, most of the things are covered by Jasmeet, which are very nicely informed to you, and I think they don't require repetition. But just to give you a very quick certain things about finer details about the FMEs and about the Cat3 fund, I'll just share my presentation and I'll run down within 2-3 minutes. So, which I just want to point out in addition to what Jasmeet has just shared with you all. So just give me a second. Yeah. So friends, we all just saw the process and everything about fund. So you saw the whole regulations are mainly into 3 parts, which talks about fund managers, the funds, and others. So in very simple language, अगर आपको anybody who wants to set up a fund, आपको एक fund manager entity set up करनी है physically. Once that fund manager entity is set up हो गई, उसके बाद आप अपना Cat3 fund, जैसे कि अभी Jasmeet just informed, you can do that. So this is the structure we just saw. And this is the basic documentation whenever you are setting a fund, either Cat1, Cat2, Cat3. These are the fund documents which you will come across, which is the PPM, the trust deed between the trust and the trustee. You will come across investment management agreement, which is between the FME and the fund. You come across the contribution agreement, which is between the investors who are investing in the fund and the fund. So these documents which majorly you will come across when you are doing the fund. So we already saw these the 3 types of schemes, Cat1, Cat2, Cat3. So if you want to set up a Cat3 fund, then you have to set up FME, which is restricted non-retail. So you have to registered FME non-retail, you have to set up for launching a Cat3 fund. So I think we all covered. So permissible, what are the investments permissible for Cat 3? So all these things are permitted, like security issued and unlisted entity. So you see A to F will circulate this presentation. So all these things are allowed for Cat 3 to invest in. So what is the restriction? Restriction is that they cannot invest in the units of mutual fund and AIFs in IFSC. They can do in India and other foreign jurisdiction, but not in IFSC. So other is they cannot should not invest in listed companies more than 25% of a corpus in single one. So minimum is 5 million. The smallest corpus fund which you can make is 5 million. And if you want to invest in an associate company, so there are sometime it happens then the investment is being done in the. This is a very common thing which come across. The investment manager knows certain company, they are in their affiliations, whether you can invest in that company or not. So for that, you have to take 75% of approval of the investors to invest in an affiliate. So that's I was talking about. To launch Cat 3 fund, you have to form registered FME non-retail. And for that, one thing is that the minimum net worth is required. That is $500,000 should be the net worth of that FME when you are launching. And the investor, which just mentioned in the earlier presentation, each investor cannot go below $1.5 lakh. And for accredited investors, I think there is no minimum, but other investor has to be 1.5 lakh. So this is the FME which you saw. So I'm just going. So this we just saw all these things, and the yellow part is the FME which you require for Cat 3 fund. So one of the major question is whether there is a requirement of people in GIFT City. Yes, when you form a fund in GIFT City, you have to have a physical office, and the require under regulation is this: you need one principal officer and one KMP. This is requirement. And we just saw it's a green channel. Through green channel, you can launch the new fund when your FME is registered. So skin in the game. So if you are setting up a Cat 3 fund, how much money the investment manager, has to put in. So that is so whenever we come across many people what kind of investment they want to do, what kind of fund they want to put up in GIFT City. So that would also depend upon what kind of amount you have to put in as a skin in the game. So for example, if you are putting a Cat 3 fund close-ended, then the target corpus, if the fund is less than 30 million, so you have to put 2.5% of the target corpus. For an open-ended, 5%. And these kind of amounts are required to be invested by the investment manager. So by when you can do it within 45 days, all those things are there, you can see below. So, but you have to keep in mind when you are putting a Cat 3 fund, the net worth, which is half $500,000 net worth is required for your FME, and the skin in the game is required, this, which is meant you are looking at on the screen. So these are the two major things when you are looking for a Cat 3 fund. So when we are talking about Cat 3 schemes, so we just saw the maximum number of the investors in a Cat 3 fund can be 1,000. So in your fund, you have to have less than 1,000 investors. Rest, I think, was touched by Jasmine in the previous presentation. The tenure for a close-ended minimum can be 1 year. It can be extended, and the maximum, there's no limit on the maximum. You can get extension of 2 years with certain 2/3 of the investors. And investment in unlisted, if you want to invest, if a Cat 3 is investing in unlisted, it's an open-ended max, it can invest 25% of the corpus. So we just saw investment in associates. We just saw in the last, the 75% approval is required if you invest in associate. Valuation, this is one of the things that many of the people who approach us ask about, sir, kharcha kya hoga saal ka? So I cannot say kharcha kya hoga saal ka. It totally depends upon what kind of service providers you are using, what level of compliance HR you are using, and various other factors. But one of the thing is valuation of frequency. You should know that what kind of NAV calculation valuations you have to do. So for a close-ended, you need to do a half-yearly valuation frequency, and open-ended, it is monthly. So whenever there is a frequency of valuation is higher, obviously your cost will go up. So whenever you are doing a fund, you should keep in mind that as well. So leverage, just saw in the last, there is no limit on the leverage, but disclosures are required. Custodian is compulsory if the asset under management is greater than 70 million. So you can see if it is less than, so probably you can save that cost, but it's good to have the custodian even if you are less than that. So it's a practice which a fund may want to follow. So these are certain recent circulars which are there. If somebody is interested to know about the credited investor definition was out on 24th January. So because the credited investors will say that that a limit of $1.5 lakh does not apply. And regarding to FME, the net worth. So now many of the people ask, sir, FME, the net worth of the FME, which is $500,000, whether it is required initially or whether it can be a later stage, what happens if it goes down. So this is a very common with people come across. So the maintenance, so we had a circular from IFSC on 16th February, which talks about that if your FME's net worth goes down, then you cannot issue further schemes. So to that extent, the things are clear. I mean, when you are applying, you need the net worth when you apply for an FME registration. So that's there. So I think these are the circulars which have come in. We can see more on this. But yeah, that was all from my side on this because I think it was covered by Jasmeet, and thanks Jasmeet for covering it very well. But here, in short, I would like to tell those people who want to uh, set up Cat 3 fund in Gift City. One of the question is within given their facts, they want to ask, sir, SEBI में लगाएं, India में लगाएं कि Gift City में लगाएं. So it totally depends on where your investors are located, where you are going to invest. इंडिया के इन्वेस्टर इंडिया में इन्वेस्ट करना है, सो देन गिफ्ट सिटी इज नॉट देयर. इंडिया के इन्वेस्टर इन्वेस्टिंग आउटसाइड इंडिया, then you can have a fund and invest outside India. Foreign investors investing in India or foreign investors investing outside India. Gift is one of the best place to put up the fund. And so I think that is the background for who people who want to set up. In short, I would say if you want to set up a Cat 3 fund, आप गिफ्ट सिटी आ जाओ, लगवा देंगे. If you have shortage of any kind of professionals, you come to Gift City, we'll arrange for the professionals. And if you are finding any difficulty in getting offices, because Gift City requires to be physically present. If you have any problem in locating the places, you come over to Gift City, वो भी आपका करवा देंगे. So with these words, on a lighter note, I will invite Mr. Mukesh Khanwala to please enlighten our audience, participants on the taxation aspects of the Cat 3 fund, and thereafter we'll take the questions which is with me. Over to you, Mukesh.
Yeah. Good afternoon to all, and thank you very much to India Juries to give an opportunity to me to share my views, some of the views to the audience. And as these experts, legal experts are present and the officials are present, please correct me if my understanding is to some extent erroneous. However, both the speaker have largely covered the procedure, the prospect of Gift City and everything. And Mr. Jaspreet Singh has deliberated in detail what is happening, what is going to happen, and how it is being happening, and the Gift City is developing. At the same time, Mr. Rastogi has also explained in detail that he has invited one and all to come to Gift City, and I also endorse my view to his view that yes, let us visit, or all of you should at least physically visit once Gift City, and then you will have a feel of it, and then you can decide about the whether to come to Gift City or not. But I'm very sure that you will really love to work there, because we are there since 2021. We are one of the first mover as a chartered accountant firm giving services to the new entities who are registering there. So now coming back to the subject itself, I request to share my PPT. So who is there? Please share my PPT, please. Hello. Yeah. Yes. Is it visible? Is it visible? Mr. Jasmeet Singh, is
Ye-
visible my screen?
Yes, yes, yes,
Yeah,
it is visible.
it's visible.
Yeah. So coming to the
Can you please make it full screen? It's not.
please make a full screen. Auji.
F5
ये लोग उत्तर है।
slide slow.
You can do Control L. Make it full screen.
Slideshow menu.
Slideshow or Control L.
In a menu above. No. In a menu. After animation. Slideshow. Yeah. After animation, slideshow. From beginning.
Yes. Yes. Next one. Yes, this as regards to direct tax framework in GIFT City, let us divide the whole taxation portion in two parts. The first part, we are just glimpses of the overall general benefits or tax regime available to all units in IFSC. And then we will go to the category 3 fund in particular. So according to us as a taxman and chartered accountant and audit, this section 80 LA plays very important role because that gives 10 years of exemption out of 15 years for their entity registered and 100% tax exemption for entity registered and IFSC. And though this is a beginning of the business in IFSC, but they will come that people will on a large scale take the advantage of this and get the benefit of tax exemption. Then there are certain, as per the double taxation and international tax law, there are certain activities if you carry on in India, that is a connection in India, you are taxed in India. If you are in IFSC, then that business connection is not established and you can do some business in India without attracting Indian domestic tax. That is also there. And then there's most of the important thing is that's the income received by non-resident from portfolio and fund managed by the portfolio manager or fund manager on behalf of non-resident is exempt to the extent the income accrues or arises out of India. Because of once if a fund is investing outside India, then all non-resident get the exemption. That is very important for us. Then regarding interest, this is also very important issue in days to come, that if IFSC unit gets borrow some fund from non-resident, then interest payment is a non-taxable to the lender, and that will be a most important source of borrowing for entity registered in IFSC. Then STT is not applicable, as everybody knows. Then certain amount of tax calculated by dividend, if any, included in total income at 10%. That is a concessional rate for non-resident also. Then certain transfer are not considered as capital gain for the capital gain. Then particularly this bond or GDR, rupee denominated bond of Indian company derivatives and other. That is also very important. Yet now there is no such incidents we have come across in GIFT City, but in days to come we are going to see this type of transactions also. Then certain TDS and this is a concessional rate also. Next please. Then these are certain others important. I'll deal with the important only, because as everybody knows, in domestic tax there is a two, which is the MAT and AMT. MAT is applicable to companies and AMT is applicable to non-companies entity. Those who are getting minimum tax, even if the tax rate is 0, then they are supposed to pay some tax. In GIFT City, if you are liable to make payment of any tax, then instead of 18%, it is a 9%. That is a substantial benefit available to the entity registered in IFSC. That is very important. And so far as CAT 3 fund is concerned specifically, then this AMT or MAT is not applicable. This is a very good welcome amendment under the Income Tax Act, because we have experienced that people wanted to have their category 3 fund, but because of AMT and MAT, they were not very eager to come. Ultimately, they have to pay at minimum cost of 9%. But now with this last budget amendment, last Finance Act amendment, that has been removed, and that is very welcome step taken by Government of India. Next. So now coming back to the category 3 fund in specific, that we'll slightly discuss in more detail. So the general tax regime is like this. That is a basic understanding one should have for before you go into any taxation matter. That's CAT 3 fund is regarded as resident for the purpose of income tax. See, it's a myth going on in some part of the people. That's those who are not aware with the technical aspect of the GIFT City. That is considered, so far as FEMA is considered, it is considered out of India. The SEZ is out of India. But as regards to other tax, that is other domestic law, that is GST, income tax, be it labor laws, custom, everything for this entity is considered to be resident, and all the rules applicable to resident Indian is applicable to this. And this particularly CAT 3 fund is considered to be resident for the purpose of income tax. So we should not forget that this is a resident entity. Fundamentally, it is not a non-resident entity. The Income Tax Act has provided a separate tax regime for a specified fund which is registered in category 3 fund. See, specified fund has been defined in a way that if you are registered as a category 3 fund with the permission of SEBI, and if you are FPI category 1, then you are considered as specified fund, and special tax regime is applicable to category 3 fund. This is going to take practically this is happening in GIFT City. All CAT 3 fund, they are taking advantage of this being a specified fund and at a concessional rate tax. The category 3 fund can be incorporated in form of trust, company, limited liability, partnership. So all this entity for restructuring, before you take any decision, you have to consider the structuring of your fund. And for that, this is very important to take decision whether you want to register under trust, or you want to register under company, or you want to register under LLP partnership. So far as FME is concerned, as usual, we have an experience that most of the entities, they go for LLP or private limited company. But in many of the cases, it is LLP because of certain inherent advantage of tax in domestic taxation also. But as regards to funds, we were discussing a lot for the entity, that is whether it should be trust or a company or a limited liability. But now we have experienced that people are coming, and there's a little firms like India Juris and other firms. They are also they're advising in detail, and ultimately the entity takes the decision that they want to register themselves in trust. We have come across number of client in our portfolio that their category 3 fund is registered as trust instead of company and limited liability LLP. LLP we do not canvas much on the in from our office, but we give the option of trust and company, and from which most of the cases the trust is being formed. And even legal people also many a times they advise trust, and at least we see we experience that most of the entities are registered under trust. Then the special tax regime available to specified fund, that is category 3 trust, shall apply only to this. One should remember that this special tax regime is applicable to non-resident only. Particularly if you go to the basic of the category 3 fund, you need to have non-resident investor. But the leverage is given that at least not more than 5% of domestic or promoter contribution or domestic investor is allowed. So 95% minimum for non-resident, and for this the special tax regime is applicable to 95% in minimum, and 5% are that is a resident investor. Most of the cases the promoters are Indian origin, and they are domestic resident people. So they can invest up to 5% only. So that is very fundamentally one should understand the concept of the structure of the investor to whom you should entertain and whom you should including for getting the based of the tax advantage in category 3. That's then offshore income, naturally it is a not out of tax jurisdiction by number of other sections also. So that should not be any difficulty so far as a fund is investing in offshore investment. Then there is a category 3 fund, that is a capital gain that is exempt under section 10(4)(d). So according to us, this transfer of AI, that is capital gain, this is we consider it very important, very important section which is incorporated under the Income Tax Act under the exemption section, that is section 10(4)(d). And with the detailed reading of this, one can get the best out of this tax advantage so far as Cat 3 is concerned. So we suggest one and all, whenever you think of any taxation in category 3, one should go to your consultant and get the detail about section 10(4)(d) advantage what are available. As I said earlier also, the category 3 fund is not liable for either AMT or MAT. So this minimum alternate tax is in domestic tax is 18%, in IFSC it is 9%, but in case of category 3 fund it is nil. So that is why one of the, as we experience, one of the major reason that people are coming for category 3 fund because they have to pay minimum tax or zero tax. That is why. And Cat 3 fund, as we saw the earlier slides also, that Cat 3 fund is more than 100. Cat 3 fund is working in GIFT City. So that is one should consider this advantage while making an assessment for category of the AIF. Then one common things, and what the earlier speaker also said, that if you are investing as a non-resident, if you are investing in category 3 fund, you are not required to take your permanent account number also, because all your income is exempt, and so it is not the non-resident may not require to have your permanent account number or to file any income tax return. If he has other income, then it is a domestic laws apply. But if we don't have any other income, then it is so many people in our office, we find that the non-resident, they are finding it very difficult to get PAN number and Aadhaar number and everything. But if you are investing in category 3 fund as a non-resident, then this headache is away from you, and you can safely bypass the availing PAN number and filing the income tax return also. I think this is a very important aspect one should consider while entering into category 3 fund. Next, please. Next. See this as applicable to all. There is an exemption on stamp duty, STT, and CTT that is for all. But category 3 also this applies to this this exemption. The important thing is, as we came across this year only, that while filing the return of category 3 income tax return for the category 3 fund, so that is it is not as easy as the other form or income tax return filing. One should be very vigilant about the other rules, because the computations rules are given under income tax rules, and you have to file your income tax return according to the rules, rule number 21A I and 21AJ. And people should not fever, because many of the cases where the fund and the administrator or fund people, those who are having a tax team inside, or local people who are there, or some of our professional colleagues also, that they do not remember to file form number 10IG, which is very important. Unless you file form 10IG, you will not get any exemption under section 10(4)(d). So remember, I repeat again, that while filing income tax return, utmost care should be taken for filing return of category 3 fund, and you need to have all the formalities to be even as per our experience. This CBDT and this system also is not so updated. We have made a direct not in the sense of complaint, but our queries to CBDT at highest level, and then only only yesterday only we could file that category 3 income tax return for one of the fund which is very prominent in GIFT City. So I suggest all the players, so those who want to go for category 3, please be prepared for some difficulties in filing of income tax return. Maybe next year it will be solved, but these are the some important rules and section which I thought that I must share with you, because we have faced the certain problems. We could get it solved, but let us see how the department react on it. But with the help of highest authority in CBDT, we have tried to solve it. Let us keep the fingers crossed that it goes through well. So that is one thing which I would like to draw their attention. And certain conditions are for getting these exemptions. Certain conditions are required to be fulfilled, which is in Rule 21 AIA has been inserted by Income Tax Rules 2022 with effect from 16 June 22, whereby in order to avail the benefit of special tax regime, that is a Cat 3 tax exemption, specified one need to fulfill. So these are the something which is what we feel practically, apart from the things written on the act and everything, practically what we feel, I have tried to share for the benefit of one and all, and with the help of India juries. Next, please. Yes, we have tried. We have worked very in detail to understand the tax rates and all. It is very, according to us, it is with my experience of 45 years in tax practice, I found that this is very important to understand all these things, and it is really difficult to understand also. One of the reason is that from 23rd July 2024, the last budget made certain major amendment in tax rate of capital gains, short-term and long-term gain. So the difficulty is much more that if you have a transaction or income before 23rd July 24 and after 23rd July 24. So we have tried to compile with the help of our own staff, and with the for the purpose of calculating the post-tax NAV also. For some of our client, we have prepared one template that how the tax rate is there. For the benefit of all, I'm just sharing with you this gives at least this template gives us comfort zone that what are the exact tax rate before July 23 and after July 23. We understand that at a glance, and accordingly we don't make any mistake. So that is a certain category wise we have given, that is listed equity more than 1 year, that is long term and short term. The before July 23rd of July, the tax rate was 10% and now 12.5%. For short term, it was 15%. Now after July, 20%. Unlisted equity shares is long term is still 10%. That is something which is very important to know. And for short term, it is 30% as well, because in most of the cases where these funds are also making mistake in while filing their advance tax or something, that they consider short-term capital gain as a 15% or 20%. Ultimately, this is 30%. So one should be very fully aware of it. As regards to capital gains in derivatives, normally derivatives is considered in normal domestic law, it's a business income. But specifically in IFSC and GIFT City category 3 fund, it is a capital gain, which has got the special tax regime advantage. So in that case, long term is 10% is still there, and then short term is 30%. One should remember for this, because nobody knows when such type of transaction a category 3 fund undertakes, depending upon the market situation. So while calculating our tax liability, while calculating NAV, while calculating post-tax NAV also, we have to consider all these things put together, and we have to be very meticulous in this particular area of post-tax NAV. Because very important that once a post-tax NAV is calculated, the same will be declared to the unit holder, and all transaction will be carried on that valuation. So if somebody has made some mistake somewhere in calculating this pre-tax NAV and post-tax NAV, then the fund may have to suffer a lot. So that is very important, which I would really bring to the notice of the fund player, that a vigilant due care should be taken for considering all these things. And we are really at present also we are facing such type of difficulty because of some erroneous report from the fund administrator, that is fund accountant, or some misinformation or some lack of information. The calculation goes haywire. So one should take care of it. Next, please. Next. Yeah, this again in continuation of the same capital gain on non-equity oriented mutual fund, that is long term and short term. Again, this template is there. We have prepared this a very exhaustive, considering all types of transaction. A template is there, and one should be able to understand what are the tax rate applicable. There may be from our side or lack of understanding of law, lack of interpretation of law, there may be some mistake, but this is for the benefit of all. We are trying to share our views on this. So if there is any error in that, then please excuse us. Next. Yeah, this again, the other than capital gain, there's interest on security, that is a income attributable to non-resident investor. It is a 10%, and income attributable to resident investor is our sponsorer, that is 30%. This difference one has to keep in mind, that if you have a 5%, not more than 5% is permissible, but if you have 5% as a resident sponsor, that is a promoter's investment in a Cat 3 fund, then the tax rate is at a higher rate. In case of dividend also, the same thing is for non-resident, it is 10%, and for resident it is 30%. And any other income, say whenever their fund has some surplus fund for a day or two or for some time, they park the fund on government bond, government debt, then fixed deposit, everything. So in that case also, the tax rate should be applied in a different way. So that is very important. The latest amendment by Finance Act, this buyback share has now been taxed. Previously, it was exempt. So now this buyback of share of a listed equity, if the fund is having this investment and they go for the buyback of shares, then it is considered as a income under section 222F, which is applicable from this year only, and it will be treated as a normal income. And this is something which is for non-resident. What is going to happen for this income, whether there is any exemption or not, that is, at least we are not clear on this. And let us wait for some time that some clarification comes, or some interpretation from a legal firm or tax the super tax advisor have their opinion on this. So that is something which is new. That is why we have kept these letters on bold. So that is very important. Next. Yeah, so I think I have tried to give the glimpses of as per our experience in GIFT City. We sitting physically in GIFT City, we are having this experience. I have tried to share it. I don't say that these are our views only, and we have found some certain difficulties, certain good things, certain difficulties or in tax department, certain difficulties with the tax regime itself, and we have to approach the highest authority in tax department also for solving the issue for filing of return of category 3 fund. So that's I thought that it is our my personal duty, being a senior in profession, to share my views for the benefit of all. So whatever further queries if you have, and if I am able to solve, I'll be helping with the help of India Juris, or with the help of Jasmeet Singh also. If they say or they then we can definitely discuss it also. Thank you very much for giving me patient hearing and giving me opportunity to share.
Thank you, Mukesh ji. The information which you have provided is 200% not in a general domain, and people will not really would not find these information and this knowledge so easily. Thank you very much in so detail, and it is learning for me also. And after this presentation, I will definitely go and learn it properly, so that whenever we are speaking to client, we are updated on that. So I
Thank you.
think before I move on to questions with Jasmeet, sir, I want to ask one question. When you say the people who are choosing concessional regime, so can you, sir, just little bit highlight what do you mean? What is for the people? What is concessional regime? What do you mean by when they elect for a concessional regime? So in the meantime, Mukesh ji comes back. So Jasmeet, there are certain questions with you which I'll take on. Sir, yes. Sir, I just asked, when you just mentioned in the presentation, when MAT is not applicable if people are electing concessional regime. So what do you mean by that, electing or selecting of accepting concessional regime? What is the meaning of that? What do you mean by that?
So, it is to Jasmeet Singh or it is to me?
नहीं आपके सर जैसे
Yeah. See,
format
yeah,
concessional
yeah. See, when the whole scheme started, right from the IFSC Act and income tax, we are trying to compare the benefits available or what are the benefits not available also. Then the main hurdle with us as an advisor, all said and done, 80LA is there for 100% tax exemption, other tax regime is there, everything is there in a no man's language. We say that there is no tax, and GIFT City is very attractive, and there is no tax. We are coming across even today also at least two inquiries in a week that yes, there is no tax, that is why we want to come. But that is not the object of the IFSC authority also. And looking in detail, that at the end of the day, that section there is 115 JB and 100 JC of Income Tax Act, which speaks about minimum alternate tax for the company and alternate minimum tax for non-company regime. So even if you get a zero tax, then you are supposed to make payment 18% in domestic tax, and this 9% concessional tax in under the IFSC Act, IFSC physical location also. So ultimately, we discussed with the people, and after a long discussion, people, at least from people from outside India, they are not so happy that ultimately there is 9% tax on it. That is a cost, and for which they postponed the decision, as we understand and they experience also. So that was the case before 1 year, 2 years rather, or 1.5 year, and we also find very difficult because the object for which the MAT and AMT was introduced in the Income Tax Act was that this is, we as a taxman, we consider this is an advance tax, and that you can get the credit of 15 years after the payment of. Suppose I pay some MAT or AMT in this year, then if my normal income is exceeding 9%, then I get the relief till 15 years. So that is good enough so far as domestic tax is concerned. But as regards to funds, that is closed-ended or open-ended fund, its life is not more than say 10 years also. Then this type of tax is a cost itself. So we also discussed with lot of a new entity, particularly those who want to come from outside India, and they were disappointed by this. But that thanks to our government, and Income Tax Act has been amended by Section 115JEE, and they specifically for Category 3 fund as exempted as AMT and MAT. So if you are a Category 3 fund in a company form or a trust firm, this minimum alternate tax or minimum alternate tax or alternate minimum tax is not applicable. That has been inserted by Finance Act 24. So that is one of the best part of the Finance Act, what we can see so far as IFSC is concerned. And that is how now people are ready to come with the Cat 3 fund. And we have witnessed that in last 3-4 months, 1 or 2 funds we have been invited for some discussion or something, and with this conclusion, they are ready to come, or they have rather come to GIFT City.
So someone is asking that a 49BA applicable for Category 3 investor. Does the fund need to submit it declaration for NRI investor who does not have a PAN?
Yeah, that is so far as Category 3 fund non-resident there, they don't ask and you don't require to pay. For other purpose, if you have to give your declaration, it's okay. But once your KYC is non-resident and you have an income from Category 3 fund which is totally exempt, you don't require to have PAN, not required to have that. Only in case of KYC if required, I am not aware of it. But in case process of KYC, if it is required, then it is. Otherwise, so far as tax is concerned, it is not required.
Right. So, Jasmeet, there is a question I think you would like to take for a fund considering an offshore jurisdiction. So, what is the distinguishing factor between IFSC in India and tax haven like Mauritius? So, it's a general question somebody is asking. So, whether it is tax or what is the difference, or why person should prefer IFSC over other jurisdiction?
See, I think over Mauritius, so definitely it should be GIFT IFSC only because first of all, it's a stable regime, politically also, financially also, and it is FATF compliant. There are concerns with Mauritius on its credibility. There's no substance in Mauritius. There are only funds set up in a single address. There are multiple funds, so there's no substance at all. It can collapse any day, anytime. So there's no predictability, no continuity of business certainty there in Mauritius. Then I think again proximity to the investment. If you are investing into India, it's always beneficial to stay close to your investments. And ease of operations is another aspect. You can hire local talent here at a much cheaper cost. Yeah, so these are some of the benefits I think in comparison to global jurisdictions.
So, there is one more question. Is it necessary to obtain PAN number from NRI OCI investor in a fund? Is it necessary to file income tax return uh, by NRI investors if they have made investment in Cat 3 fund based out of GIFT?
See, that is if you have invested your income consists of only income from category 3 fund, and if you are non-resident, it is not required. If you have any 1 rupee income, say from saving account or so NRO account or any other account, your domestic tax laws applies, and in that case, they will also have a withholding tax, and you need to file your return in that case. But I am very clear that if you have only income as a non-resident from category 3 fund, there is no need to have permanent account number, no need to file any income because your income does not accrue or arise in India also.
So whether it is NR or NRI, for both it is, if they are outside India, it remains the same for them.
Yes.
So Jasmeet, now we have few questions on this thing. I think so. Why one should make Cat 3 fund, and what are the things which only Cat 3 fund can do? I mean, this is a very common question that most of the people ask us. So Cat 1 क्यों बनाओ, Cat 2 क्यों नहीं बनाओ, Cat 3. So what is the exactly what Cat 3 can do and other cannot do, and what can do? So when people say Cat 3, so can Cat 2 do this thing or not? So one question, since we are talking about Cat 3 today, so what is the one thing you would say that Cat 3 can do and others would not be able to do, so that people can decide on, अच्छा मुझे Cat 3 ही बनाना चाहिए.
I think it will depend on person to person or investment manager to investment manager what their strategy is. And as far as the categories goes, I think we don't like to categorize the funds into Cat 1, Cat 2, Cat 3. It's just for the tax purposes that we have done under our regulations. Globally, if you see, there's no such category. It's there in SEBI only. And we have adopted that because of the taxation clarity and ease of tax. And SEBI has given the categories their definition. So category 1 definition is clear. Category 3 is clear. Whatever you cannot do under category 1 and category 3 needs to be done under category 2. So that's the residual category. So category 1 is early stage ventures, and if you're doing some social entrepreneurship, then category 3 is hedging, hedge funds, complex trading strategies, mostly listed securities. And then real estate, debt funds can be category 3 also, category 2 also. So I think that is dependent upon the strategy of the fund manager, what he actually wants to do. So
So
it's
maybe if they
more
want
of
the
his.
fund to be, if they want to fund to be taxed at a fund level, then they can have a Cat 3, and they want to pass through, give the pass through
That
to
can
the
be one of the
investors.
factors.
Yeah,
Absolutely, that
that
can be one of the factors, but not the only factor.
Yeah.
There are many other factors involved here.
I just add to what Jasmeet is saying that this first of all category 1, 2 and 3 they have a different business to deal with. So you cannot do this retail business in category 3. There are certain, as we have seen the previous slides and we have heard both of you that that is a specific activity. If you carry out, you don't have any option either to go for 3 or 2 or 1. You have to go to that only. So far as taxation is concerned, what we distinguish between these funds is this, that category 1 and category 2 funds are pass-through funds, and category 3 is a non-pass-through fund. The meaning thereby, that is a category 1 and 2 fund, if they are having any income, that will be passed on to the unit holder in the same way and same pattern as it is earned by category 1 and 2. Suppose category 1 and 2 fund has got the dividend income, when it is distributed to individual unit holder, the same will be taxed as a dividend or interest or capital gain in the hands of unit holder, and unit holder will pay tax on it. The fund will charge its own charges, and if there is a business income, then fund will have this responsibility to pay tax. Otherwise, it goes on to the unit holder to pay tax, whatever it is, and that is a loss is also permissible other than business, that is to carry forward so far as 1 and 2 is concerned. So far as category 3 is concerned, it is similar to what the domestic law as a partnership firm or LLP in India is that. It is a non-pass-through. Non-pass-through means category 3 fund takes the responsibility of paying tax on behalf of all the unit holder. They pay tax and they distribute the amount to the unit holder, which is exempt in the hands of unit holder. So the tax regime, special tax regime is available to fund level category 3. And because they are having non-resident investors and all, they are getting different treatment so far as tax is concerned. In domestic law, if it is a partnership firm or LLP, then a 30% tax flat is applicable and the partners get tax free. Like that, in a most of the case similar situation, category 3 fund is there, and that is why in the IFSC and GIFT City people prefer to go for Cat 3 fund rather than Cat 1 and 2 unless it is specifically required to make investment in category 1 and 2 fund. This is the difference what we observed. It may not be 100% correct, but it is something like that.
So I think we will take one more question for Jasmeet, and we have overshot the time. But Jasmeet, can you just with a single window approval, is it totally in place or is it still taking time? So when we came into GIFT City, it was not a single window, but now as you said that SUIT suite is there. So is it fully functional and how much time the whole process is taking? Just some range kind of thing.
No, so the single window system has been fully functional since October 1 of 2024. From there, since now all the applications are being filed through the single window IT system, all the FME applications, the fund applications are still not enabled. It will take some time for the fund applications to come through SWITS, the single window system. But for the FME applications, we are only accepting applications which are coming through the single window system. So yeah, it is fully
So how
operational
much
now
approximately,
for the
how much
FMEs.
timeline, any person who is applying to timeline, maybe it is difficult to say, but
See, see, for the funds, we hardly take any time since it's under the green channel. For the FMEs, we conduct our due diligence, which takes some time, but we try to do it as early as possible if all the information from the applicant is there with us. So you can, I think this is more of an industry feedback you can take from the industry. If I tell you
yeah,
something, it would be conflict of interest,
yeah.
I believe.
So we keep on telling clients how much time it takes, but I can understand. So, but the
Yeah.
questions are
Yeah.
pouring in, but we have already overshot the time and we have taken a lot of time. But one question I will just put to sir because it has come here. So for a category 3 AIF in IFSC that has obtained a category 1 FPI. Maybe Jasmeet, if you can see that. For a category 3 AIF in IFSC that has obtained a category 1 FPI license to be a specified fund, what residential status you select in ITR? So it is for Mukesh sir.
Yeah,
As
it is.
usually FPI fall under NR category.
Yeah, it is resident only, and that is what I said that we have also found very difficult that if I put resident, then certain columns are not allowing us to put the figures that form 10 IG and all. If I put non-resident, some other so ultimately with a marathon exercise with even CBDT and income tax or highest level officer, we could solve the issue. But whether it is a foolproof or not, that we do not know. But it is there. But fundamentally, as per the law, this fund category 3 fund in IFSC is considered to be resident entity so far as tax is concerned. That is very clear. But while filing the form ITR and all these things, we found certain difficulty. It may be our mistake or whatever it is, but we found difficulty. But ultimately, it could solve. And I think the government will take a liberal view if any mistake is also happened, because if you keep all the records what you have put in the efforts to file the return in time, and it is not because of some error on software or department or some understanding or interpretation, I think it's a fit case for relief if something has gone erroneously unintentionally. So that is how it is resident. According to me, it is resident.
So just with last question for this webinar, it is to you. Is there a combination on or permissible limit of listed and unlisted instrument to be maintained in a category 3 fund? Like, can a category 3 fund do 50% investment in listed instrument and 50% investment in unlisted convertible bonds?
I think for the open-ended category 3 fund, there's a restriction. You cannot do more than 25% in unlisted. But if it's a
Yes.
close-ended, then you can do any combination of listed or unlisted.
Okay. Okay. So,
Okay.
so thank
Can-
you.
can-
So,
I have one question that is for Jasmeet.
Yes, sir.
yes, sir.
That is, see, so far nobody might have come across the closure of entity from IFSC. We have come across some inquiry for closure. The reason is very obvious that the order which they were to get is they got in another entity domestic law, and that is why they want to close. But we don't find any correct procedure to close it down because they have not started the business. All registration is there. They have not started the business, but we are also looking for all circulars and all framework and that, but we are not finding it. Jasmeet can throw light for the benefit of for particularly me and everyone present here that that should be very important. If somebody fails or they dishonor the commitment which was if it is violation of rule, then it is okay. If authority can terminate it. But voluntary, if I want to surrender this IFSC, what can be the procedure and easiest way to do it?
You want to close down the FME, right? The
Yeah.
investment management entity. Okay. So have they reached out to us in any way?
No, they have come to us only. They have come to us only, and we want to come to you.
No, you can tell them to directly reach out to us. We want to directly maintain that. They can reach out to us. We'll let them know the entire process. It's not that hard. I know there are no circulars as yet for the closure of the entity, but you may please tell them to reach out to me or to any one of us in our team. We'll be helping them in closing the entity.
See, as they are away from Ahmedabad, that is why they have
No.
asked us for that, and that's but on behalf of on we can definitely tell them to deal with you
Yeah.
directly.
Yes,
Or if
yes.
require for some understanding, we can come for your advice
Absolutely.
only. That is how to do it. So because these are the case, we have also come across first time this, so we are not able to give proper advice on that
Right.
also.
Right,
So
right,
there are
right.
two things. One has to surrender the license, and then they have to get out of the SEZ and change their registered office from here to other part. If they don't want to close down the entity, then maybe surrender the license and then change the registered office from this place to any other place in India. Maybe we need to check on that if that is possible.
No, I think you can tell them to reach out to us directly. We'll be very happy to apprise them of the process and everything.
Yeah.
Okay.
Thank you.
So thank you. Thank you, Mukesh. Thank you, Jasmeet. It was really wonderful. We overshot the time by half an hour, but
Yeah.
a very interesting question and answer session and a lot of in-depth knowledge Mukesh sir has given. And thank you all the participants for being here. And we'll look out to you in our next webinar. Thank you all of you. Thank you for your
Thank you.
time.
Thank you,
Sir.
Mukesh.
Thank you,
Thank
Jasmeet. Thank you, sir.
Samit. Thank